Good afternoon and welcome to the FX Daily Roundup with ForexAnalytix. And we've seen the dollar ease back here. It looks like we may be coming back here right towards this 98.20 area here. Got on another chart, but it looks like there's some good volume coming in at 98.20. The Euro's actually going to push up here. We rallied right into the 61% right in here off of this move. We can take a quick look at that. You see coming right into that 61%, but we do have a little zone here between that 64 and 75-ish area here, right there, seeing if they might be able to push up because they did have a pretty good strong close. So see if we can push up a little bit higher. As I said, we've seen the dollar going paired back. I think the dollar, you can see coming in right there, 98.20, 21 right there. So we think we can dip a little bit lower, probably push up the euro, probably a little bit closer to 10.75 tomorrow's FOMC day. And we did go in and see the dollar CAD make this run up to 133, and quite a run it has. Now we've turned around and we've paired back a bit as oil's come off of its lows. Obviously, when oil was really taking a dip, we saw the dollar CAD really take off and oil came under a lot of pressure with the alert news headline, whatever, that the Saudis would be able to bring up to 70% of their capacity online within the next few weeks. And that certainly sent oil tumbling lower, sent the dollar CAD going higher, and since then we've gone in paired back and started to slide back right now at 32.43. Cables continue to move. We do have a level here that we're looking at. You see this 25.18, that's coming in right there, confluence with 25.27, which is 161% of this move of 2309 to 1959. So nice confluence there in an area where the market may want to go in and push to, and I think that it potentially can get to it. We certainly made that run last week, just barely, ran out of gas and took a dip, and here we are pushing. We may want to go in, at least if nothing else, push some stops that may be just above this level here. Obviously, the big news was with crude oil. We saw a pretty good dip here. We'll jump into that quickly. And boy, did we take a pretty good little tumble here in crude with that headline that just sent crude just tumbling. Quite the fall here. And we actually had a move down here that potentially, once again, looked like they were going to get, I think we had 58.79, I believe it was the 78%, but I thought we might be able to just push it a little bit lower. I had stepped in and added a little bit, but I didn't actually get that much, and I wasn't even happy with the level. The level I came in was good. Actually, if you think about it, 58.35, but because we were under so much pressure, and I'm thinking, look, they may try and push this lower. I was happy to get out with an ad and then just a little bit on the original entry. And I looked up here and I thought, some days it just works like that. Had an entry at 58.70. The low was, I think, it's 58.73. Had an entry right here at 63 and came up short. Then we paired back. I thought we might be able to jump up to about 60.70 maybe, but came up a little bit short on that one. But we've seen crude, make a move back towards this 50%, basically hitting it to the tick and then kind of easing back. I thought we might be able to overshoot it just a little bit, but that was not the case. Gold working a little bit higher. You can see here we broke this trend line on the 30-minute chart, so we're pushing up a little bit higher. Getting back into the main chart. We see the dollar yen really continue to stay strong. And I mentioned this even yesterday, and there's some good levels that it came into, but I really don't want to touch this thing until we get past BOJ, see what they want. I know they're looking to go on and add some additional stimulus and how much further this can push it. I mean, we've already come up here to this 827 to 78% here, and we've reasserting ourselves again. How much further it can go and push it back? I think we had on the bias chart here for today on the dollar yen up in here at 834. Market seems to have topped out 836. Not bad, not bad. But once again, like I said, some great areas if you were just day trading. I don't want to step in front of this BOJ. If it keeps going, I just don't want to be stuck with it, and that's why I didn't jump in. But there have been some good levels looking at that. Another one has been on this peso. It's really coming under some pressure right now. We're actually at the bias chart support here. You can see it in the pink line here on, pull this back here. But the peso 1940, so we're right there. We're just a hair below that. We actually had our bias chart resistance today at 1954. Market was pairing back. We saw a nice volume level come in. I shared, which is at 1943. But you can see here we've continued to push lower here with the peso and coming into 1940 right in here. So we're just below our bias chart support here. If you're short, it's certainly probably a pretty good area to go in and step in and cover some of those shorts. If you did go and catch that short on the way back down, Aussie's come back up. We're going to take a quick look at the cross rates. And Euro Kiwi, with the euro strengthening, we've seen a pretty good move here with the Euro Kiwi. We're not too far away from bias chart resistance today at 74.50, just a little bit further to go and push on that. And looking here with the guppy, certainly we've made a very nice rebound here with the guppy. Here after that, we had that pullback. We've made a pretty good run here, and then we had that pullback, obviously, with the Saudi headlines, safe haven flows into the yen. Those started to recede, and then with the strength of sterling, we've seen this pushback, and we're right back up at these highs here on the guppy. Sterling's doing very well, as I mentioned here. We've got a nice confluence level on the pound at 20 cable, which is going to be 25.18 with 25.27 being the 161% of that area that we showed here. You can see here, right there we are at 24.96. See if we can goose those stops above 125. Other than that, not a whole lot here. Ahead of FOMC, obviously the big mover was going to be with crude oil in that headline. But we did take a dip back in here, and there was our bias chart support. We dipped back a little bit lower this morning. We've held, and we tried to push back hard, but we have not gotten above our bias chart resistance. You can see that. We're not that far away from it, coming in right there at 74.27. We're at 74.12. Looks like we got up to 74.24. So we came pretty close. We came pretty close on that. And like I said, we put this bias chart out at 3 a.m. in the morning. So we were down here at 3 a.m. Look at that. That's 6. So this is where we were at, around 3 a.m. in the morning down here. And we had this for our bias chart resistance. And I'll miss that by what? I guess about 3 pips or 4 pips. But I haven't done anything with Aussie yen in a while here. Other than I think about a couple of weeks ago or so. Getting back into a different screen here, let's go on and crude oil is now slid down to 60.05 now. S&Ps have held up very, very well. This was our I didn't have it on a bias chart, but this is a resistance level we talked about yesterday. I mentioned in the chat room, and then again here on the Roundup. I think we'd made it up at the time to 3.25, and we kept that here, this 3,004, and looked like they nicked that right there in the Asian session, and they've kind of paired back, but it's still been relatively quiet. Most expect the Fed to cut, so that's going to be bullish for equities. So certainly keeping that gain up there. And as I mentioned, gold will certainly benefit from a cut there. Here's the pullback we saw here in crude. It's just been like up and down like a yo-yo. Came into that. I thought we'd, come up here into this 60, 60. I thought we'd make that run up here. We ran out of gas right there, that 60-60 area, but oh well, those things happen. 10-year yields are starting to pare back a bit. So not a whole lot happening. Other than the moves in crude oil and the euro coming back after being offered put this back. Being offered all session, yesterday's session, it was even broke some key buy chart support at 1033, and then we turned this thing negative. We held the 61%, and we were able to work higher. I did have a long, and I added on to yesterday, and I was able to go in and get out. Obviously, got out too early because we kept moving higher. But last month we had the FOMC. I was thinking, okay, the dollar's going to weaken going to that, and the dollar did just the opposite. So we have seen the euro moving a little bit higher here. Looking, maybe it may be able to stretch it up to around 1075-ish, maybe, and then that may be it. But we shall see what happens. The concerns is that there might be a hawkish cut. Other than that, everything is relatively quiet. Things have slowed down quite a bit, and we've seen the crude oil going and back off down to about the $60 level after getting up to almost 60.60. That was a 50% retracement of this recent range here. So other than that, it's relatively quiet. Tomorrow will be the big day with FOMC. We'll see the fireworks. So and you may want to go and consider, like I said, trying out the new offer with ForexAnalytix and getting a discounted rate on our premium cap package. And as I mentioned, that gets you not only to meet it, which is the strength of the services, our chat room, but of course all the analysis from basic technical, macro, harmonics, Elliott Wave, and then the different webinars. And as I said, the European crossover webinar is done at 3 o'clock in the morning Central Standard Time, but it's taped and made available by Stelios in the chat room about an hour and a half before the New York opens. So once again, you may want to go, now's the time if you want to go on and try ForexAnalytix, and this would be, time to, not only when things are starting to heat up in FX and across all the other markets, we're seeing far greater volatility, but also, as I mentioned, a chance to go on and save money and take advantage of this offer. Well, we'll see you tomorrow, and thanks for joining us here on the FX Daily Roundup.